Hello, Shankar, and welcome.
Hi, Puneet.
So, a little birdie tells me that Muhammad Rafi is one of your favorite playback singers. And one of his songs is "Ae Dil Hai Mushkil Jeena Yahan, Zara Hat Ke, Zara Bach Ke, Ye Hai Bombay Meri Jaan." Do you think that quite sums up the market mood right now as well? A bit nervous, a bit cautious.
Yeah, it's not just Bombay. ये जीना जीना मुश्किल है पूरी दुनिया में ही फिलहाल तो. So so why blame just Bombay for this? But yeah, it's been a very difficult year so far, and and very few people would have escaped this particular carnage. I mean, it's almost impossible to not get hurt in such a situation. It's only that you have to thank your stars if you escape with little less damage and injuries and scars than most of the people on the street.
Somewhere, do you think this investor confidence has also been shaken, in this carnage? And it'll be a long time before it actually mends.
So, first of all, we don't know whether it's over or not. Okay, to be absolutely clear, I'm talking more on a global basis. Individual markets might display different trajectories. But on a global basis, there is no evidence so far that this is going to be a quick and short bear market. Okay, it doesn't look like that. I mean, there will be occasional very strong rallies, and I'm sure we are due for one because markets have fallen in a straight line. And usually when that happens, you set yourself for a counter trend rally, which can happen because of a number of factors, including, in my view, the most likely reason for a rally that I think looks likely is that crude might fall by $5-10 because it has now hit a fairly high level and it's probably going to take a breather. And then the talk will start that inflation is now under control and prices of commodities have cooled off and rate hikes may not be so strong and as brutal as expected. And those are the things that trigger bear market rallies. But I'm not so sure that this thing on a global macro basis is going to resolve itself very, very quickly.
But is the nervousness overdone? I mean, the fall from the top is, it's nothing that the markets and investors have not seen earlier. So why this panic this time around?
I don't think any of the investors around, in large part of the 6 crore demat accounts, I don't think 5.5 crore demat account holders have seen anything like it. So, I mean, that is virtually 90% of the market has not seen, in terms of at least numerical 90%, they have not seen anything like this. So they walked into the market out of luck more than anything else at the right time. And then the next 2 years were decent. And that led people to believe that, they had figured it out, they cracked the code and markets are not as difficult as what people have believed it to be. And they will not have gone through anything like this, and therefore there is going to be a lot of pain out there. And
So where do you see the maximum pain coming in terms of sectors right now and let's say 3 or 6 months down the line?
I think banking remains my favorite area of pain, without doubt, because in this kind of rising interest rate, rising inflation, squeeze on household wallets, squeeze on discretionary spending, all of those things are not good for bank lending. Because, or if you try to build an aggressive lending strategy in this kind of macroeconomic situation, you're actually going to create problems for your balance sheet a year or 2 years down the road.
So where do you find comfort at the current levels?
I find a lot of comfort in a lot of small companies. I think they will ride out this wave better than large companies will. My view has been that the Nifty is not going, 70% of the Nifty is not going anywhere for the next foreseeable future. I do not think that 70, maybe 65, maybe 75% of the Nifty is going to give you a 15% compounding. So, which basically means that a Nifty returns may well have been, the best returns may well be behind us for at least the next 12 months. And therefore, what confronts you is a market that can flatline and fall rather than give you a 15-20% upside on the headline Nifty. But I think in the small cap space, I find a lot of very, very interesting little companies. And I think if you work hard, you are going to get a fair degree of winners out of those.
Is there any silver lining amid all this gloom and doom? And how are you approaching as the markets as a fund manager, buying selectively or remaining a fence sitter?
No, you can buy. I mean, this is a great time to look for good buys, but in a bull market, you can be indiscriminate. You may not need to exercise so much, research and thinking and debate. You can simply go out and buy stuff and you will make money. And that's exactly what we saw from March 2020, when almost everything we bought went up. But with the exception of, a few of the FMCG and the old line favorite consumer stocks and the banks. But if you avoided those, you were generally quite, in a fairly good shape. But today's market will compel us, is compelling us to work very, very hard at identifying companies. So it's a great time to be putting in a lot of work, meeting companies, understanding their commentaries, understanding their numbers, and finding 10, 15, 20 good stocks, which I think everybody can.
So you have access to companies, but a normal retail investor wouldn't. How do they go about researching a stock? Probably the Shankar Sharma way.
So yeah, I agree. It's not a absolutely level playing field in that sense between large professional investors and the small investor, because you will never get that much management access. But even without that, you get a fair amount of information online now. You can run screeners, you can read through the conference call transcript, you can run through the investor presentations that companies have to now regulatorily put up on the net. So a lot of information is there. It's not that there is an information arbitrage available. You can get a lot of information without actually, really needing to speak to managements. And as long as you run a disciplined process, and I repeat this, that the trick is not knowing management or having management access. The trick is in sizing your portfolio properly. And we all make these mistakes, even professionals do, when we have overexposure to certain groups or certain types of stocks under to the other ones. And usually the overexposed ones will take a big beating. And then when that happens, we start living on hope that these stocks will bounce back. So a 30% fall is brushed aside, but 30% fall means you have to rally 50, 60% just to break even. So those are the classical things, not just buying stocks, but how you look after them after you bought them. How do you place them in a portfolio? How much risk management practices, best practices have you put to work? Those will determine how well you do. It's not just smart stock picking that makes you rich.
Thank you, Shankar, for your time today. We hope to catch up with you soon again.
Sure. Thank you, Puneet. Thank you for having me.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.